Okay, good morning everybody. It is Tuesday, October 19th, 2021, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. So real quickly, just to kind of review yesterday here, go ahead and bring up the 30-minute really quickly. We did have a little bit more of a bearish bias than any type of bullish bias off the overnight low yesterday. Now we did talk about the fact that this 30-minute had a nice clear bullish divergence and the 60-minute had a nice clear bullish divergence. But because the 4-hour didn't really have an agreement and because the 10-minute down below was not the most beautiful bullish divergence, even though there was an argument, we were kind of hanging our hats more on the bearish side going into yesterday's market. The thing is once we got through the 50% of the previous daily level and 50% of the previous 4-hour level that we look at here with our strategy, we flipped to a bullish bias. So going into the open yesterday, just like we said in the pre-market, we were looking for sells. But once the market got a very strong bullish momentum and came right to the overnight low, just a few ticks in front of it, and got the bullish push out, and we got through 50% of the previous day and 50% of the previous 4-hour, we went ahead and switched to a buy side going into the rest of that morning there. So yesterday we kind of got it a little bit wrong, but overall we're able to adapt to new information and go ahead and switch. Now, this morning, we're going to go ahead and jump up and do our pre-market and see what things are saying now. Again, not too surprising if we look at our 60-minute here. This breakout to the upside is exactly what we expected. So not too surprising to see what's happening here. Let's go up to the quarterly, and remember that this bar, the current quarterly bar that's still in development, was all the way down here just a few days ago, right? So we've got this really nice bull push, and if the candle ends up closing up a little bit higher here, we'll have one of these giant wicks, just like we see. And I wish I remembered the code here, Control F11, just like we see here on some of these previous candles. Some of these really nice big wicks to the downside, and then the continuation higher. So that's what we're seeing right now on the quarterly. But same thing, everything looks strong, no signs of exhaustion. Same thing on our monthly chart. Now this monthly candle, something just to say about that, if we do go ahead and push up past the all-time high that we made back in September, or at least just before we rolled over the contract, if we push up above there, we'll have a really nice bullish engulfing candle on the monthly, which is pretty strong. You can see last time we had a bullish engulfing, and what was it, Control F11. Let's see if I can actually do this. We had got, let's go back here, really nice bullish engulfing there, really nice bullish engulfing there, and you can see a nice continuation to the upside when those things occur. So we'll go ahead and see what happens over here. It would be nice to see them go up, at least break a little bit above, and we would have that same situation. Let's go down to our weekly, and the weekly, what do you know, the two bullish signals that we got back at the beginning of October have led to just over a 200-point bull push from the lows back from October 1st and October 8th. And then remember, if we go to the daily here, we had the nice daily October 1st and October 12th. And again, over 200 points from those lows since that occurred. Back to the weekly here, nothing else to say. We've got two beautiful bullish divergences off the lows. No signs of exhaustion on this current push. We get to the daily, and remember this, we were talking about that bearish case, and that's also what we were kind of using yesterday. We noticed that the candle that closed back on Friday had an argument for bearishness, and we kind of talked about the fact that this could continue to kind of push, and if the RVI continued to be a straight line up, we would have to kind of reevaluate and just accept the fact that we got a false signal. And that's essentially what's happened here. As each new bar is opened and pushed higher. The RVI still has this nice straight line up. And as you can see from the previous high that we were comparing back here, and then that high back here from September 16th, we are now way up, right? So we don't have any bearish case anymore on the daily chart. So really nice bear divergence back on the 27th. Right now, it looks like it's continuing higher. So have to reevaluate that, and looks like there are no more signs of bearishness on the daily. So if we just kind of summarize the ultra high going into the high time frames, very, very strong with no signs of exhaustion in the push anymore. We go to our 4 hour, we do have that very classic bearish exhaustion pattern off the current high. And I do want to talk about where we turned in the market here, because this would be something we didn't actually talk about it, but had I have actually addressed this, we would have talked about this yesterday. And that is the fact that in the push, so assuming that we were going to get a push yesterday, which we were actually expecting there to be a lower low, if anyone remembers, because that 4 hour wasn't showing us a nice clear bullish divergence. We did expect a lower low, but had we have actually gone back and talked about potential resistance to the upside, we would have seen this. So just to point out, if we go back and we look at all the previous structure in the market here, and we just kind of demarcate some of these areas of support, you can see right around here, the market kind of pushed through, found a little resistance, pulled back, pushed through, and came down and kind of found support right around where this red line is that I just kind of arbitrarily drew on the chart here. And then you can go back and you can see these general areas. There's one right across in here. We've got right off the all-time highs in there. And you can see the market likes to kind of come up to these areas and kind of play between them and then maybe break down into the next area of structure. Well, this one right here, look at where it's sitting. That low that I kind of drew that off of was 45.03. Now if we go scroll all the way forward to where we came up to in the overnight session here and got a pretty nice pullback so far, I think we've gotten about a 15-point pullback from the high of the overnight session. That high that we made there was 45.0450. So right into that swing low there, and maybe the next swing low right there, came right to it, and then went ahead and got this really strong pullback that we're dealing with right now. So just wanted to point that out. Outside of that, on the 4 hour here, again, a nice classic bearish exhaustion pattern off the current high. Remember that in a bullish push, we are going to get those type of patterns. Doesn't mean that we are going to get a huge sell-off, but a 4 hour bearish signal like that is not something to be ignored. So if things start to sell off here, we need to orient ourselves in that direction in the market. Just to kind of show you what I'm seeing here, if we just zoom back to what happened back on September 26th, take a look at this pattern right here. Market pulled back, pushed up to a newer high, and if we look down here to the RVI, got a nice classic bearish divergence off the highs, and then we did get the sell-off. So if we look at where we are right now, look at how much that pattern, how similar that pattern is. We got this push, pullback, push to a higher high, and this lower high on RVI, just like we got back here. So we do want to kind of keep that in mind. If this is a pretty significant pattern that if it was to follow through, as you can see here, could lead to a over 200 point pullback. So we'll keep that in mind this morning. Outside of that, nothing else to say from my divergence perspective. Of course, if we do scroll back to October 12th, 13th, October 1st, we do have all the nice bullish divergences back there. And as you can see, we're now over 150 points up. Remember, we had the impulse move. There was a 150 point move here. There was a 150 point move here. Then we got a little shallow pullback and a continuation. So now we're almost another 200 points from the low back here on October 12th. Go down to our 60 minute, and 60 minute kind of has that similar pattern. Now again, if we go back to the high we made back on September 26th, and you look at this pattern, the pullback, push to a new high, look down to the RVI, a much higher high on RVI to a lower high, even though price pushed to a higher high. Look at that pattern, now look at this over here, and we're seeing it in real time, right? So now you can hopefully over time start to see this kind of stuff as it's happening. So right now we see it in development. There's no guarantee that we're going to get this kind of extreme sell-off of 200 points or more, but we do want to heed the signal and keep in mind that the 4-hour and the hourly are showing a classic bearish exhaustion pattern. Again, no guarantee of a 200-point sell-off. It very well could just be a little shallow pullback for a continuation because, again, in a strong bullish push, a bearish exhaustion pattern that we see doesn't mean we're going to get some type of extreme crash. But if it starts to sell off, we want to keep in mind that we have these stronger, higher time frames on our backs. So from that 60-minute, remember we talked about this yesterday. We got the bullish divergence off the overnight low. So going into the open yesterday, we talked about the 60-minute here, and then as we dial down, the 30-minute showing that bullish divergence. Had we have actually just kind of hung our hats on those two time frames, we would have just been bullish from the start. Again, we came into the open with a bearish bias, but the second they pushed through some key kind of lines of demarcation in the market for the bulls and the bears, we switched our hats and we're looking for longs when they started, when this bullish momentum did jump into the market. So there's that nice follow through there into the overnight session. And again, I think there's an argument if we look back to the previous major highs before the pullback here and then continuation higher, you can see that overall the market has trended higher, but the RVI in this whole area here has kind of pushed lower, right? So we are keeping that in mind. So let's go down to the intermediate time frames and see what they have to say, see if there's agreement, and then we will go ahead and go to our member section and get our eye levels on the charts and start looking at some more relevant things to trade here. So 30-minute, again, there's that nice bullish divergence just before the open yesterday that we were watching. And then as we push, and you can see these really nice classic bearish exhaustion patterns, we push up, exhaustion, shallow pullback, push up again, bearish exhaustion pattern, shallow pullback. So the cool thing about the 30-minute is at this moment, we no longer have that pattern, at least for this whole area of structure in the market, right? So we've continued to push higher on price. We've continued to push higher on RVI. And so we don't really have an agreement with the 60-minute and the 4-hour up top here. What I am noticing at the current moment, really nice bullish divergence off the low that we've just made on this pullback. So remember we talked about coming up right to 45.03 here, breaking it by 1.5 points and getting the pullback. That 45.03, if we've gone all the way back, was this area of support in the market all the way at the end of August going into September. So on that pullback, really nice bullish divergence at the moment off of this candle, which will close at the open. So assuming it stays looking the same right now at the open and closes, we will have an official bullish divergence off the low on the 30-minute and no agreement of bearishness off the high that we saw when we jump up to the 60-minute and 4-hour. And then on our on the 10 does have the agreement of the bearishness off the high. So we can ignore the one time frame. Remember, if you understand my strategy, we can ignore that one time frame isn't agreeing if every other time frame is. And we can see a nice clear bearish signal up there. But we also have the bullish case down here. So this morning, if we could just kind of wrap things up, all the high time frames don't really show exhaustion until we get to the 4-hour and the 60-minute, and the 10-minute also as well. So we have a good, clear bearish case off the overnight high. The caveat to that, and this is the important thing to keep in mind, is in these pushes, we probably did get a few of these patterns as we push. So on the 10-minute, and we talked about it on the 30-minute as well, as they pushed to higher highs, we did get exhaustion patterns, but there were shallow pullbacks and continuation. So this morning, what we're going to have to do here is see what the market, what the bulls and bears do coming out of the open. If they start to push and they can get through this overnight high up here at 0450, then all the bearish things we saw on the 4-hour, the 60-minute, and the 10-minute will essentially be negated, at least for that moment, and we can have more faith in the bullish push here. Keep in mind, for larger targets, again, if we zoom back here, a lot of support in the market right around this area where we found resistance. There's really not too much above us now. If we continue to push, we get through the overnight high, there's not too much as far as market structure to get through before we're back at the all-time high. So we have kind of this CP here around 45.18 that does make some sense to me. Once we get through that, it's basically right back to the all-time high. I don't see anything too relevant as far as resistance up there. So that's where we'll leave it for this morning for our YouTube audience, and we'll jump down to our short time frames, get our eye levels on the charts, and start looking for some potential trades here going into the open for our members. So have a great day for everyone out there watching on YouTube.